Hey WealthWyse crew, it's Assad. Finance is evolving fast, and if you want to thrive, you've got to adapt just as quickly. Today I'm breaking down the 2025 Mid-Year Wealth Playbook, what's driving the rally, where the real risks are, and the growth with protection portfolio that actually fits this moment. Let's get into it. First up, what do the numbers say? The first half of 2025 delivered solid US gains, S&P 500 up 5.3%, Nasdaq plus 5.4%, Dow finishing at 3.6%. Not bad, but let's be clear. Volatility was high and risk is still lurking everywhere. UBS and Yardeni are calling for the S&P to hit around 6,500 by year-end, driven by tech and AI momentum, even while geopolitical uncertainty keeps everyone on edge. Meanwhile, BlackRock's investment institute isn't buying the all-clear just yet. They're flagging shaky infrastructure and shifting focus to shorter-term euro bonds plus US equities with AI exposure. So here's your quick takeaway. The markets rallied, yes, but trade tension, inflation, and geopolitics are real risks that you can't ignore. Now, let's talk expert prescriptions. Ray Dalio isn't mincing words. He calls US debt a financial heart attack. His advice, add tips, keep 10-15% in gold, and a small allocation to Bitcoin. Goldman Sachs is even sketching out a sell America scenario that simultaneous declines in US stocks, bonds, and the dollar. Their move? Load up on gold, avoid long-dated bonds, and stick to short durations. Austin Goolsbee at the Chicago Fed says stagflation fears are overblown, but with inflation steady around 2.5%, caution is still smart. And look, Reuters and Nasdaq are reporting sell-off fears ahead of August holidays, with weak sentiment and some stagflation signals flashing. So, how do you play it? Mid-2025 calls for a portfolio built for both offense and defense. Here's how I'm thinking about it. First, core fixed income and tips. Boost your allocation to short and intermediate treasuries plus tips. That shields you from inflation and growth shocks, just like BlackRock and Dalio recommend. Second, gold and commodities. Allocate 10-15% to gold to hedge against that sell America scenario. And don't stop there. Broad commodity exposure, especially energy and metals, gives your portfolio more inflation protection. Third, equities with tailwinds. Stay exposed to US stocks, but focus on sectors leading the charge: AI, tech, and healthcare. These are still powering the market rally. Fourth, alternatives. BlackRock's big on adding market-neutral and tactical funds. The idea? Buffer your returns if the usual correlations break down. Fifth, crypto caution. Limit Bitcoin to 1-3% of your portfolio tops. Fidelity and 21 shares have shown even a 1% allocation can boost your Sharpe ratio without bumping up your overall risk. Now let's get tactical. Rebalance right now. Move some equity gains into cash, bonds, and gold. Use ETFs like STIP or IEI for tips and short duration bonds. Mix in alternatives through funds like BDMX or BIMBX. Keep your crypto exposure disciplined, 1-3%, rebalance quarterly. And don't just set it and forget it. Watch the VIX, track leading indicators, inflation numbers, Fed updates, and keep an eye on key trade or tariff deadlines. That's your mid-2025 WealthWyse playbook. Momentum where it counts, hedging where it matters, and a tilt toward alternatives that could keep you ahead of the curve. So what's the first trade or shift you're making this week? Drop it in the comments. Check the links for deeper dives, and if you haven't already, subscribe for smarter money moves every single week. See you next time.